Verizon Communications Inc., VZ. It's a dividend. It's in telecommunications. Headquarters is in New York. The PE ratio is 6.6x. The debt to equity is 1.49, so it's a little bit more in line. It's still on the high side, but it's more in line of what I like to see for my dividends. And the dividend yield is 7.43%. And as you see, again, with the chart right now is sitting at 34. It's about 34 bucks, but in normal cases it's at 60. So again, this is another big mega cap opportunity to double in price if it gets things situated out. And on that next slide, we'll see right now they've been in the news. Right now, Verizon, AT&T, a lot of the telecommunications companies are not having good news come out about them right now because of the lead cables with their old lines and stuff like that. So they have to spend money to refurbish these lines to get them more health friendly. And again, it's the news. I don't know what's true and what's not. It could just be Wall Street trying to get better prices to get shares of the company. So I just see it more as an opportunity. So VZ stock is best telecom stock, 331 English ordinal. And we have Verizon 2023, number one telecom stock, 331 English ordinal. And so it's telling off the bat, Verizon is the best telecom stock. I have a Verizon for my plan. AT&T, bad management. And, I think long term they will be okay. VZ stock, good buy in 2023. 2,222 in the Latin cipher. Again, I like to see those repeating numbers for the 2s and the 3s. So when getting into their fundamentals, we'll see that they have assets. They have $379 billion of assets. Their total liabilities is $283 billion. So that means their net equity is $96 billion. Shares outstanding is 4.2 billion. So it's even larger float than Walgreens. But again, it's a major company. Their net equity, and again, this is when it comes into you have to be flexible when it comes to your calculations, because if you're rigid in what you see, you'll miss opportunities. The net equity to the shares outstanding means the fair value is at $22.97. And you might say, okay, well, that means there's a discrepancy to the downside for where the stock is right now. Of course, it's at 34 bucks. If the fair value just to the net equity, if you look at that, is 22 bucks, yeah, there is a discrepancy. But again, you have to understand, why is there a discrepancy there? Why are their liabilities so high right now? And so the liabilities are high is because they had to spend a lot of money to get the 5G rollout going. In the conspiracy community, we understand not a lot of people are high on 5G. I understand that, but we live in the world, we live in the matrix. I don't think there's really a good way around 5G. It's going to be rolling out regardless. They've been spending a lot of money on 5G, because they have to get the situation, their stations correct. Verizon is known to have the best coverage around the world. So if they want to keep that advantage, they have to spend a lot of money to keep that when 5G is fully intact. So they're spending a lot of money on 5G. And so from the Seeking Alpha article, this is what it says in its conclusion. Overall, Verizon's steady lines of business, solid revenue mix, and focus on core segments provide the stability that the company needs to work its way out of its net debt pile. And so that they know what they have to do. They just have to do it. And right now, these are the subscriber bases for the top 3 companies. Facilities-based service providers by subscriber count in the U.S. Each active SIM card is considered a subscriber. So right now, AT&T still has the most subscribers, as most users right now at 217 million in quarter 4 of 2022. But Verizon is in second, 143.3 million. T-Mobile at 113.6 million. And so when we're looking at the Gematria, we have Verizon stock, 5G investment, 330 English ordinal. We like seeing that. 5G debt is good for VZ long term, 303 English ordinal. We have that 33. Long term, I think they'll be fine. Again, I talked about the toxic lead situation. VZ will lead telecom after COVID era, 137 English reduction. Toxic lead cable news is Verizon buy, 137 English reduction as well. Toxic lead cable FUD, fear, uncertainty, doubt is buy for telecom, 137 English reduction, all the 33rd prime. All right. And so this is the opportunity. Again, we can only go off what the news is saying. I don't know if there's a real lead problem with the lead cables or not. All I know is that they're going to figure it out, and I think this is an opportunity for Wall Street to produce FUD to get people out of their shares. I think people, if they believe Verizon is going anywhere in the next 20 to 30 years and not be one of the top three cell phone providers or network providers, I think they're kidding themselves. I think they're kidding themselves. And so this is why we're getting in now. And then right now I put also subtract. So this is where the fair value gets in. I want to go over. Um, this is where you have to have flexibility. So if you take out the long-term debt from Verizon, so I use this strategy as well. Sometimes, depending on what the debt is for a company, you could take out their long-term debt. The reason why you can take out their long-term debt is because they don't have to pay it anytime soon. So it's not a problem that's current that they have to deal with right now. So it's not like they have to make payments on it right now, or if they do have to make payments, it's at a low interest rate. So I take their assets minus their long-term debt, which is 137 billion, which equals 242 billion dollars. So you divide that by their shares outstanding. The fair value without their long-term liability debt, only with their current, is a share price of $57.63. So that's where the opportunity is on the positive side. They don't have to deal with their long-term debts right now. It's for 5G. We know why they have those debts. They're going to figure it out. So you take that off the equation, you put that back on, and you have $57.63. So that's again almost a double up for Verizon when they get their things situated. And for the last decode, subtract long-term liabilities, fair valuation for realistic and optimistic calculation 330 English reduction. So those are the two Dow of the dogs, Wall Street, Walgreens, and Verizon. I think these are potential double up opportunities for the long term because I believe they're going to be figuring their stuff out. They didn't take out debt for strategies that I don't believe won't work. I think both are good, realistic, pragmatic strategies for where the world's going. For Walgreens, people are getting older; they need more primary care. Why not make it more personal? Why not have a more ecosystem with that? For Verizon, 5G is the future. They have to spend on 5G. So if they want to keep their top spot, you got to spend money.